Now, let's talk about what happened this week in Washington. We had the reopening of the government after the partial government shutdown, and we had the extension of the debt ceiling, that debt limit through February. So we're talking about it here this Saturday on Orlando Matters with Jason Edwards, an economist and financial planner with Edwards Financial Services in Winter Park. We have you on from time to time to help us make sense of some of the complexities of the economy and some of the ramblings and silliness that comes out of Washington. What are you watching with the agreement that we got? What are you looking at? How do you grade what the politicians did up in Washington?
Yeah, again, trying to make sense of that, that takes a whole nother 55-hour segment, I think.
Right,
but the reality of it is, what you look at when you're managing people's money, you're dealing with portfolios, you've got two components. You've got the reality, then you've got the emotional aspect.
Sure.
The reality is what the government has done and what the impact would be to the fiscal economic outlook for the United States. And fortunately, from an economics perspective, things like the market are a very good indicator. You see that companies are still growing, they're still doing well, earnings reports are still coming in, people are still spending money. So that's a good thing.
That's good.
From an economics perspective, long term, what is the hangover of these type of situations that the government just did, and what would be the impact to the global economy? Because ultimately, as we know, that impacts us. So we look at both of those.
So let's break it down. Let's talk about the partial government shutdown, and then we'll get over to the debt ceiling. Partial government shutdown was not a full shutdown. They kept some of the most critical parts of the government open through this 16 days. What was the impact of the shutdown? The Democrats keep throwing around the number, $24 billion impact on the American people. What do you watch? What is your analysis of it?
It's a great question because there's a lot of information out there, some accurate, some maybe highly inflated, as you just alluded to. When you hear government shutdown, you give it that finality. Oh, the whole government shut down.
Right.
My God, there's no one answering the phones.
Right.
Reality, it was only about 17% of the government. Now, that doesn't make it easier on the 17% that were impacted,
Sure.
but there were a lot of things that went behind the scenes that really even diminished the financial impact. So I think those numbers are a little bit inflated. For example, DOD was able to call back civilian employees and just say they were essential. Everyone that was furloughed now are getting their checks. So there was really more of a hiccup than anything else. I think the bigger picture is how was the U.S. government, and more specifically the U.S. economy, viewed on the global scale.
Sure.
Great example is recently they had the Asia Pacific Conference this week. And what they call soft power, which is the ability of the U.S. economy to grow and influence other economies, was diminished dramatically. There was a lot of hubbub. Well, maybe we stop buying U.S. treasuries, or maybe we stop buying U.S. resources. And that is a bigger fear, but that's going to be, you know, that 2 to 10 year window visual. But for a local immediate impact, I think it was nominal at best.
We're seeing the emergence of China floating the idea that, hey, we can be the international currency for business, not the dollar.
That's right. Well, it's funny you say that because the conference I just alluded to on the 17th, they have a big picture of all of the heads of state, and the only two heads of state that were front and center were Russia and China. The U.S. representative was the Secretary of State Kerry, who was at the far end.
Wow.
And China then, because there was no U.S. economic presence, went around the Pacific Rim and basically gave out money.
Wow.
And that's a big concern because if you're an investor and you're investing in U.S. equity or U.S. currencies, and the U.S. Treasury becomes less attractive to global expansion groups. Now you've got debt not being bought. And right now, as we know, we have $17 trillion worth of debt.
Right.
So there's always an economic fallout. So that just highlights how I think the politicians really need to look at the bigger picture and sort of put aside whether it's, you know, Republican or Democrat, whether it's Bob or Frank, whoever. It's got to be what's the economic outlook.
All right, we're going to take a quick commercial break. When we come back, I want to talk about the impact of extending the debt ceiling to February, kicking the can down the road as they've been doing for a couple of years up in Washington. We're going to take a quick break. We're going to continue Orlando Matters with Jason Edwards when we come back.